Pending home sales, which are signed contracts to buy existing homes, they reversed course and declined in July despite lower mortgage rates. Diana Olick explains what's behind those weaker numbers.
Home buyers in July were not so eager to make a deal. Pending home sales, which measure signed contracts for existing homes, fell 2.5% in July compared with June, according to the National Association of Realtors. They were also slightly lower than July of last year. This came after strong gains in May and June. Lower mortgage rates may have helped to end the spring season on a high note as they began falling at the start of May. But they did tick slightly higher in July before turning lower again in August. Today's buyers, especially on the low end where demand is strongest, are most sensitive to the smallest moves in rates. The reason behind falling rates, which is concern over the economy, also doesn't help.
There's more activity right now than I think there would have been if mortgage rates had stayed high. But there is a lot of uncertainty in the economy right now. People are worried about the recession that's showing up in consumer sentiment data, and it might be holding back what would have been a larger surge in demand.
Pending home sales fell across the nation, but most steeply in the West, where home prices are highest. The steeper drop in mortgage rates in August could help liven up the fall market, but there are still too few homes for sale, and supplies are no longer improving as they were earlier this year.
New listings are down right now, according to our data, and eventually, with more buyers out there and fewer listings, buyers are going to be competing for homes, and we're going to see more bidding wars.
More bidding wars will mean higher prices yet again, not exactly what this market needs, as affordability is already stretched to the limit. For Nightly Business Report, I'm Diana Olick in Washington.